The other important part of learning accounting and speaking the language is getting a hold of these financial statements. Now, financial statements equal really the story of the business. Now, this is not just what's going on, who's working there, what we're selling. It's really the financial story. And believe it or not, all those transactions that go into the business are what creates the financial statements. So the organization of the accounts as assets, liabilities, as equity, those are all really important to understanding the financial statements. So generally in business, there's a few financial statements, 4 of them, that are used by both internal and external users. Now, the financial statements are what the external users have access to. If they're a publicly traded company, we can find them on the SEC's website, the Securities and Exchange Commission. Now, if they're a private company and they're not publicly traded, it might be a little bit more difficult to find those financial statements. But nonetheless, we're going to focus on the 4 main financial statements, and I'm going to present those to you in the order that they generally should be prepared. So we're going to start with the income statement. Now, the income statement is exactly what it says, a statement of income. But it's not just income, it's all of the revenues and expenses that make up a period of time for the business. Okay? Now that time frame is important. So while the income statement is a measure of performance, we're going to talk about the other statements that are a little bit different, okay? So the income statement can be for a month, a year, or even a quarter ended, okay? So we're normally going to see for the period, whatever that period is, again, it could be a year, could be a quarter, could be a month. But if it said for the period ended December 31, and we'll just say 2023 for now, we don't really know what period we're talking about. So we're going to instead use the words month, quarter, or year. So if we used the title for the year ended December 31st, 2023, that's really going to mean January 1 through December 31 of 2023. Now, this in parentheses would not show up on the income statement, but I want you to recognize that that's the period of time. Now, I am going to show you high level what's incorporated in the income statement. So what do I want you to know? What type of financial statement we're looking at, what it's used for, what the time period is, and what the contents is. So we are going to have our revenue presented first, followed by our expenses, which gives us our net income. Now, our very famous profit equation is revenue minus expense equals net income. So if on our financial statements, we've earned a revenue of $100, had expenses of $50, what's our net income? You've got it, $50. So again, when you think about the income statement, this is a part of stockholders or owners' equity. That's where our net income rolls into. That's stockholders' equity. Okay, so that's our first financial statement. That's the income statement. Now, in a corporation, the next statement we're going to prepare is a statement of retained earnings. And this is going to show our net income minus any dividends that are paid out to owners. And dividends are just the return. So when we think about corporations, that's kind of the next place. If we were talking about sole proprietorships or partnerships, the next place we would show that is on a statement of owner's equity. So now we'll show the statement of retained earnings. And this is going to be for the same period of time. So same as the income statement, okay? We have to show that period of time. Now you might be thinking, well, what does this measure? Well, what this measures is just the changes in retained earnings. Okay, well, you might say, well, that's pretty basic, pretty straightforward. Again, what is it going to show? Well, let's look at that. It's going to show our any beginning balance of retained earnings. And if we're working on a year's time, we're talking about this is really January 1. What did we have at the beginning of the year? We're going to add any net income that we have, and you've got it, or we would subtract loss. If we actually lost money, it's not good to lose money, but we may in early years or even as time goes on. Then we're going to subtract any dividends. So any dividends paid to owners, and that's going to give us an ending balance. And in this case, it's at 1231. So let's just say our business is new and we didn't start out with any beginning balance. What's our net income? Well, we get this from the income statement. So then we add 50. Let's say we paid $10 in dividends. What's the ending balance of the retained earnings, or what we're retaining to pay out to owners? It's $40. Now our next statement is very important. This is our assets equals liabilities plus owners or stockholders' equity. Okay, and since we've been using stockholders' equity, I'm going to put SE in there. Okay, this is the financial position of the company. So the financial position of the company is the balance sheet. Now, this one is a little bit different than the previous two. This shows a point in time. So for us, this is going to be as of December 31, 2023. Now, this shows us cumulatively from the beginning of the business what the financial position is at a point in time. And that's how the balance sheet works. In our balance sheet, we're going to list all of our assets, all of our liabilities, and all of our stockholders' equity. So our balance sheet really shows us, what do we know as assets equals liabilities plus owner's equity? That's right, the accounting equation. Now, we don't necessarily have to know here for this example what the assets are, what the liabilities are. We do know what the stockholders' equity is. Okay. Part of the stockholders' equity is common stock. Now, again, in this example, we don't necessarily have that number, but it's made up of common stock and retained earnings. And this is important because this ending balance of retained earnings represents what shows up on the balance sheet. So we've done three primary financial statements: income statement, statement of retained earnings for a corporation, and the balance sheet. Now, time frame is a little bit different for each of these. Okay, income statement, statement of retained earnings is the same. Balance sheet is the only one that's different. Income statement measures performance. Statement of retained earnings is just going to show us what we have in our balance to pay to owners. The balance sheet shows us our financial position, which is assets, liabilities, and equity. Now, our last statement is one that at the end of the day, you might wonder, well, how does cash fit into this? Well, we know cash is an asset, and we have a very special statement called the statement of cash flows. Because what we're learning is this thing called accrual basis accounting. So all of the previous statements are all based on accrual basis accounting. What that means is that cash doesn't have to be exchanged for a business to operate. So if that's the case, this now will get us to a cash basis of understanding what happened to our cash. Now, this one is going to be the same date. So same time period as the income statement and statement of retained earnings. Remember, the balance sheet is the only one as of a point in time. So what goes on our statement of cash flows? Well, for right now, we're going to keep it fairly simple. This is going to include all of our sources and uses of cash in the business. We might use cash to pay for equipment. We might use cash to pay employees. We might receive cash from customers. We might receive cash from our owners. We might receive cash from a loan. This is going to tell us that, and it's going to be categorized into 3 sections: operating cash flows, investing cash flows, and financing cash flows. And when we dive into these more in another class, we're going to see what makes that up. But just a couple of things to keep in mind. Our daily operating procedures, those cash flows are all going to show up here. Investing, anything that we invest long term in the business, such as purchasing equipment, or maybe we want to buy some stock. And financing has anything to do with loans or equity transactions within our business.